Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, August 2nd, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead Trader Viper XL 007, and we are going to take a look at crypto regulation. Are we actually closer to crypto regulation coming soon? We might be, and we're going to dive into the latest House Bill 4763 that has come out. Was introduced on July 20th and has been through a couple of the very initial steps of a new bill that has been introduced into Congress. And what I found when looking through that is printers are still useful. Because looking through the House bill through online material and trying to bookmark things and then make jump points here and jump to this document here, maybe I'm getting old, but having that old school printed paper was super helpful. But before we hop to this week's content, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what type of content you're trading. Love to hear what you want to hear about. You'll also find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Lastly, you can pick up this particular episode wherever you get your podcasts. And if you look for it and you can't find it there, let us know and we will make sure we get it there in the future. But hopping to this week's content, Viper. So Viper, you sent a message to me last week and you said, hey, there's this Senate Bill 4763 that's out here. It's really kind of, highlighting a lot of the things that we had previously talked about in episodes, saying, hey, there likely will be eventually some sort of regulation because there are a lot of ambiguous points, or at least points that don't clearly fall in one particular camp of enforcement versus another, going around the CFTC and the SEC, that's the Securities Exchange Committee, as well as the Futures Trading Committee that governs that aspect of it. There was different court cases that were coming out there, and you said, hey, this is the thing that we kind of talked about. And so I said, well, great, let's talk about it on the next episode. And I tried to do my homework here. I tried to read this House bill, and I learned something about how this is introduced. And that is the document, kind of, I'll say boring or a little difficult to follow, makes a lot of references to modifications of previous laws. And so there are many, many sections in here which are basically amendments to the Securities Act of 1933, as well as the Security Act of 1934. And a Securities Exchange Commission Act as well. And those content of that original thing is not actually in this House bill. So in order to see how the definitions and comments and stuff fit in, you have to go fetch that portion of that, which is why I said, man, it sure is nice to print some of this stuff. So you could flip to the section that this House bill was amending or making modifications to, and then you could read contextually everything around it. Because standing on its own, if you try to look through the House bill, well, a lot of the important parts will jump out to you, and they will be correct. To understand the full context of things, you kind of have to jump back to the sections of previous legislation that they are making amendments to with this overall proposed House bill. Needless to say, I have a mild understanding of the content here, but I have a feeling this is not quite as in-depth coverage that you were able to glean out of it. And so I speculate, Viper, as you kind of take us through this, because I believe you even went out to watch the exhilarating, probably C-SPAN coverage. That's that channel that used to exist on cable. It's probably streamed online somewhere now, which is basically just a camera that's pointed at Congress, and then you just watch your tax dollars at work.
As a as a slap in the face to C-SPAN, they just skip straight to YouTube. The Financial Services Committee, where this bill originated and where this markup hearing was, they just have their own YouTube channel that's literally the U.S. Financial Services Committee YouTube channel. So yeah, they don't. It's C-SPAN is so old, man. Nobody goes to C-SPAN anymore.
Man, look at these. Look at our congressional leaders really leaning to that disruptive technology to bring the latest and greatest to your living room or your wherever you're watching it, your mobile device.
Yeah.
Anyway, Viper, let's talk a little bit about this crypto regulation, this House Bill 4763, because I'm sure there's lots that people have said about this, and some of it might be true, some of it might not be true. But hey, you and I are both technologists, and they made the source code available to us here. So, What do you know, Viper?
Yeah, I mean, and to your point, it reading this really feels like somebody dropped the script to, I don't know, a Marvel movie, nothing that exciting, a more boring movie. They dropped the script on your plate and they didn't give you the first 5 scenes. And so you just kind of jump straight into, oh, wait, what are we talking about? So yeah, very much true on that read that you had as far as that. So I don't know the best way to tackle this. So we're going to just kind of try to get through it quickly because it can be dry, but I do want to start at a high level. Why are we talking about this? And we're talking about it because we talked about it earlier in the year. And we said so clearly that, the way out of this current situation is regulation. And so, being a fan of the technology and the power the technology has to advance so many different aspects of our digital lives, I'm very interested to see that develop. And so, I'm very excited to see how this progresses, to get through this chop water of uncertainty so we can get into some better clarity of just the space as a whole. I'm not even trying to say uncertainty and clarity as the, like, that's starting to become I don't know, it's so unfair. I just mean it broader picture that this is a new industry and some pieces of it require better clarity on it. So excited to see how that plays out. The other thing is, I started this journey, unlike you. Like you said, I started this watching 3.5 hours, not all at once. I broke it up over multiple days, 3.5 hours of this markup hearing. So I did not do great in civics class. So I am just, barely at a base understanding here, but basically the life of a bill. You have authors and a team of, a mix, hopefully a bipartisan mix of authors to present a bill. They present it to whatever committee I believe that bill makes the most sense in. So in this case, the Financial Services Committee. And it's presented in one of these sessions, which is the markup session. The purpose of the markup session is for people to propose amendments to the bill within that committee. And then in the end, they go through and they roll call and they vote on the different amendments as they were proposed. And then they do a final roll call vote for the bill itself and whether or not the committee would like to recommend the bill move to the House floor. And so where we're at in time is this bill was approved by the committee on a 35-15 vote, I believe, and it did have decent bipartisan support. So it now moves to the House floor where then it will go sit for probably a long time as the entire House of Representatives then start to pick at it, broker deals with each other as they will do this, but this and that and that and that, before the House eventually votes on it, assuming they vote on it this session. Then if they pass it, it goes over to the Senate, and then the Senate does the whole same thing again, and then it goes, yep, I'm going to stop. And then it eventually works its way to the president. I feel like there's a back and forth somewhere, whether it's House, Senate, House, president or House Senate president back to the Senate. I don't remember. But point is, it's got a long way ahead of it. But the initial showing here was very interesting and telling, which was why I wanted to watch the video, because I wanted to see what the actual thoughts were from some of these representatives. Even if they were just reading a script that somebody wrote for them, I wanted to see what their, how knowledgeable do they sound? What are their complaints? What are their exact supporting points? And how valid do I personally, in my own opinion, view those arguments? So some things that clearly came out over and over again, because it is a government hearing, it is Congress, so there are going to be a couple hot button topics that everybody that wants to be against it but doesn't know much about it will just harp on these two things of but this and but this. And so I wanted to hear what those things were. And so what came out of it were, there were concerns that one of the primary issues we saw with FTX and supposedly Binance and some other things are this commingling of customer assets, where if you operate a broker, you're very much not allowed to commingle customer assets with other assets. Basically, you have to hold the customer funds one-to-one or to some various, regulated degree. And in the case of FTX, there was obviously none of that oversight. Therefore, FTX said, "Hey, we got all this money. Let's go leverage the snot out of it," and then things collapsed from there. So there were concerns that there is still commingling of funds allowed under this bill. There were responses saying, "No, absolutely not. That's not true." Then there were concerns of that this bill actually lessened consumer protections by transferring oversight from the SEC, which is a 4,800 employee organization, over to the CFTC, which is like 750 people. And so there were concerns that the CFTC is understaffed and there's no funding proposed in the bill for that, and a counterclaim that there is funding proposed in the bill and it was going to come from the Treasury Department. I'm not going to bring that one up again because I didn't dig deep enough to get real clarity of who was right, who was wrong in that one. But funding is an obvious and understandable concern. There were concerns that the bill will protect bad actors by basically letting them announce their intent to register with the SEC, and then claims that once they've announced their intent, the SEC is no longer allowed to go after and go for enforcement actions against them, and giving them some sort of a get out of jail free card. One of the things that that really resonated with me, and the last time we talked about this on the episode, was the summary at the top was basically saying, look, we have two oversight bodies. We have the SEC and the CFTC, and they're both butting heads, claiming territory of this is ours, no, this is ours. And when that happens, there's two choices for those oversight bodies. They can turn to the courts and ask the courts to clarify a ruling on any particular thing, or they can turn to Congress and say, Congress, like, hey, you got to clear this up. Who's right, who's wrong? I mean, it's kind of a parent and child situation. And obviously the SEC is trying the courts. They've tried the courts very successfully, something like 130 wins of 131 cases. One of those cases being the Ripple case, which was comically referred to as a half a win in the proceedings here, because we did get a ruling from the first court in the Ripple case. But nonetheless, that really resonated with me and what we said previously on the show, because we've basically defended the SEC's actions so far. I don't buy for a second, even though I did initially, I don't buy for a second anymore this argument of, oh, it's the SEC's out of bounds and they're creating rules by enforcement and, yada, yada, yada. And like, no, everything seems to check out that the SEC is doing what Congress has prescribed for them to do by law. And they're not stepping out of their bounds or anything. It's just that where they're stepping is kind of muddy, and it's, well, what do we do in this particular case or things like that? So I very much believe, and we've talked before, that there is only one way to clarify this, and that is make new laws that make that situation more clear. So that resonated with me, that seemed to be the motivation of the bill, was to step up and be Congress and do what Congress should do in such a situation. A couple of the quotes that I got out of it there was one representative who was very much in favor of the bill, but I certainly appreciated his candor when he said, "Let me be clear, I do not understand or even like almost everything I see in this industry. I'm a huge skeptic of it, but I feel like I did in 1998 about the internet. Just because I don't like it doesn't mean it doesn't deserve a chance to develop safely with some guardrails in law." So I can appreciate that, I don't expect everybody to like it. And there's plenty of good reasons to not like it, as we've talked about before. But as a foundational technology, as an evolution of how we interact with digital things, like, it makes sense that maybe the problem isn't the technology, that maybe the problem is how we're letting people use the technology, which certainly harks back to some of that internet talk. Meanwhile, there were also others that just very adamantly against the bill. One of them saying, "In the 20 years I've been in Congress here, this is the worst bill I've ever seen presented for markup." He claimed that he was friends with the author of the bill, and then said, "Let me just say it's not his finest work." Uh, so, and
I really kind of hope that with all these advancements of technology, we get lots more of these like recorded sessions. Like, some little system goes through and like transcribes it all, and you can just be like, I wonder how many times this particular member said this is the worst bill ever, like in the history of his
yeah,
quotes. I kind of wonder that. So how you watch sports and they're like, this is the first home run after the second most hit time of the attendance of this, just crazy statistics. I would love to hear some of that as a I don't know, color commentary.
yeah, and kudos to him if you do get that data, and consistently he always says it's the worst bill, and so we're clearly on a downward spiral of quality of bills.
Yep, that's what I was thinking.
So he said it was terrible, and then he went on to say that he was very concerned about the negative impact this would have on traditional finance and the banking systems and all this kind of stuff. So it seems to trend well with why he thinks it's the worst bill ever, if he's worried about traditional finance and the banking systems. And I'm not even saying this is to replace the banks. Not that at all, in my opinion. There's a lot of, crypto diehards that are like, oh, this will replace money and this. No, that's not it at all for me. For me, it is, again, a foundational technology that can give rails to that traditional finance sector to actually elevate the way we interact with our money or with our assets. And so that's not to say, to hell with the dollar, we're all going to be using Bitcoin. Like, no, it's saying this is a technology upgrade to make things just move faster and move better. So I don't think there's any threat per se to the banking industry or traditional finance. It's in my opinion, a big upgrade to the systems in play. And then lastly, one of the other things that people were worried about was, actually, it wasn't people in Congress. It was the hot takes coming in on Twitter, and the people, the conspiracy theorists, and the people that want to have a boogeyman. They all grabbed this clip of the bill that said you could not invest any more than 10% of your annual income or net worth into digital assets. And so then it went wild with the narrative of, they're trying to control our money and they're trying to censor us, and they don't want us to invest any more than 10% of our money. That's ridiculous. There's no such rule in equities or anything like that. So, so that's just kind of the high level picture of what I saw, what I took in. And I'm certainly of the mindset, when two people are claiming the exact opposite thing from each other, and it's all centered around a written document, I try to be as logical as possible and say, you know what? Let's read the text. Let's see what the receipts say, because this seems like a pretty easy conflict we could just get right past, get right straight down to. And I guess that also, I mean, I kind of chuckle at that, you know, maybe because the text is so dry, it is so hard to understand, but I guess it's a testament to how often we do that so many things, narratives can fly in conflict to each other, and we just don't try to resolve that ourselves. But so at a high level, that's what I wanted to break down here. And I mean, I don't know if any of that strikes you, Sprocket, as far as things that you agree are a problem or you like to see, or, you know, how the narratives strike you, I guess we'd say.
Yeah, I don't know. I guess I'm a little salty when it comes to things like that, because I feel like everybody out there that gets a little blip in just kind of does it for the soundbite, because of kind of what you mentioned. Nobody ever really facts check what's ever said or heard.
Yeah.
And when it finally is fact checked, well, it's too late after the fact, and nobody goes and reads the actual fact checks, and they just take for face value what was said. And I don't know. It's kind of like in presidential debates, I think, kind of do this a little bit too, where, you know, they'll kind of go through that, and they'll have these like debriefs or parallel channel where they're trying to like fact check the things that are being said in the presidential debate. But what makes the headlines the next day and all the mainstream media is all what was said, and the fact checking and all that stuff is like a footnote. And, you know, we're not very so good at attention span of things. I mean, look at the acceleration of all these other, you know, beautiful 10-second videos. It's probably why our channel will never have more than 20 subscribers, because our content extends beyond 15 seconds. But anyway,
Yeah.
I think you kind of summed it up there.
Yep. So with that said, let's try to run through some of these high level the things that the text, I think, somewhat clearly explains that people were worried about. So right up off the top here is this whole because it did sound bad, right? Like if somebody files an intent to register, a notice of intent to register, and then they're not allowed to be prosecuted for anything. Like, yeah, that sounds pretty bad. It also kind of sounds silly, and it sounds like that may not be the entire truth here. So right here in the bill, notice of intent to register for digital commodity exchange brokers and dealers. Any persons may file a notice of intent to register with the Commodity Futures Trading Commission. So first of all, this is just saying that anybody can file, and these are the conditions under which you might need to file. I'm not going to read through those, but then as we keep going down here a little bit, here we get to the bit that had them worried, I guess. So it says, in general, a person who has filed a notice of intent to register under this section and is in compliance with this section shall not be subject to an enforcement action by the Securities and Exchange Commission so they shall not be subject to an enforcement action for listing or offering a digital asset deemed a security, or they shall not be subject to an enforcement action for failing to register as a national securities exchange, broker, dealer, or clearing agency for activities related to digital assets deemed a security. So right there is your hot take of like, see, look, you can't bring an enforcement action upon them. So first of all, it's clearly defining, no, you can't bring an enforcement action for the thing that they're there to register for, which kind of makes sense in my opinion. There's nothing about listing or offering a digital asset deemed a security that threatens the consumer and therefore infringes upon consumer protections. So in both these cases, A and B, in my opinion, it's just saying, hey, they came here to register for something, pause, and we can't bring enforcement actions upon them for the thing they're here to register for. Now, as far as the get out of jail free card, if we kept reading, it clearly says non-compliance. Paragraph 1 shall not apply if, after notice from the commission, and I believe the commission is in reference to the body that is approving or taking their intent. I don't think it's the Securities and Exchange Commission because they are referenced as two separate things, but nonetheless, paragraph 1 shall not apply if, after notice from the commission and a reasonable opportunity to correct the deficiency, a person who has submitted a notice of intent to register is not in compliance with this section. So, yes, we will bring enforcement action if you are under non-compliance with something that you were notified of, and that's probably something about your behavior or something you're actively doing that infringes upon consumer protections. Paragraph 1 shall not be construed to limit any anti-manipulation, anti-fraud, or false reporting enforcement authority of the commission or the Securities and Exchange Commission. So to me, this was the big one of like, it's a get out of jail free card. It clearly says paragraph 1 shall not be construed to limit anti-manipulation, anti-fraud, et cetera, et cetera. So it's saying you can't use paragraph 1 to not go after somebody for doing something that's fraudulent or manipulative or anything like that. So, so that was our first case of, okay, that makes sense. And, and I think this is an important exercise because when bills are important, and there's plenty of really important bills that go through Congress, you got to cut through this noise of these narratives and just get straight to it, because I don't believe that, we're this reckless, if you will. I know that's very memeable when talking about Congress. We don't write our bills as recklessly as they're portrayed, I guess is my point. So the next one, this is addressing that whole 10% thing, because I read the snippet, and here's the snippet, this yellow part. I mean, it very clearly says 10% of the person's annual income or joint income with that person's spouse or spousal equivalent, or 10% of the person's net worth or joint net worth of the person's spouse or spousal equivalent. It basically, I guess it's the paragraph before that says it, but the digital assets purchased by such a person during 12-month period preceding the date of the transaction shall not exceed that 10%. So this was the clip that went around on, as the chest thumping, like looking for the boogeyman. They're out to get us. So again, what does the text say? We can dig in here and we can see, if we go up a little bit, this is talking about exempted transactions in digital assets. Specifically, it says, in general, the Securities Act of 1933 is amended in Section 4A by adding the end of the following. And so real quick, this is one of those things that Sprocket referenced where all of a sudden we're jumping all over the place. Because essentially this is saying, hey, go look at the Securities Act of 1933. Now, after Section 4A, we're going to add the following. And so that's where you just got dropped a script and you were missing the whole first three acts. But nonetheless, we're just amending onto the Securities Act of 1933 that transactions involving the offer or sale of units of a digital asset by a digital asset issuer. So as far as this whole 10% thing goes, we're not talking about how much money you're allowed to invest in the space of crypto or go buy off of an exchange or anything like that. The context here is we're talking about amending the Securities Act of 1933, which is specifically about an investment contract, an initial sale of that investment contract. And it's stated right here that the transactions involving the offer or sale of units of a digital asset. So it's not saying you can only invest 10% of your net worth into the space. It's saying you can only invest 10% of your net worth over a 12-month period prior to participating in an initial offering sale. And so again, if we unpack, why does that matter? Why is that important? And I don't know the exact answer, but to my logical brain, from what I know so far, is these initial offerings are discounted prices. And there is a very real consumer protection concern when you offer this at a discounted rate and then you go and list it on the market for open market access, that the price is higher. The initial offering is higher than what you pre-sold to all those other people. So there's a very real consumer protection concern that you list that thing higher, and then all of a sudden, all of those pre-salers dump on it, and then anybody that jumped in, the consumers on the open market, they just get dumped on and they lose a bunch of money, which is always possible regardless. But this, to me, this is a protection to say, hey, you can't just, if you're able to participate, you can't just throw all of your money at this because you know it's going to be, listed 30% higher or whatever. But regardless of my speculation, the point here was certainly that this wasn't a rule on how much you could invest in crypto. This is just specifically targeting rules on that initial sale of something.
Yeah, I think this one here, Viper, also extends just a little bit beyond just the consumer protectionism. I think this is really kind of targeting, and this is my speculation. I mean, I looked at this all for 10 minutes, so I'm an expert. I think it's more around corruption and stuff like that, because or someone that can tilt the scales, because the subsequent sections here say, hey, after you're done, you really can't own more than 10% of this thing. Oh, and by the way, the transaction of how you bought this, you shouldn't really be doing that from people that are not really part of registered to be authorized to sell this. Means you didn't buy it from a reseller, a ticket reseller. It says ticket scalpers. It also talks about, and it has to contain only the stuff in the contract, no extras, right? There's like the extra benefits, like, oh, here, buy this pen and get a free PS5 type of thing, where, what you're actually bidding on and spending money on. So I think this is a little more also targeted around anti-corruption and ways that, big money can kind of skirt other things by, going through different channels. So I think it's consumer protection, but I think it's also just, keep the fight fair.
Yeah, absolutely. And what I didn't do any homework on was I really wanted to look up what some of these rules were around IPOs on the stock market, because I would be willing to bet that anybody that is an accredited investor, quote unquote, that is allowed to participate in the pre-sale of a stock before an IPO, I would very much bet they have very similar rules regulating that exact thing, and for all of those same fraud and manipulation reasons, as well as some consumer protectionism.
Yeah, actually, when it comes to equity holdings and stuff like that, I think once you become a common shareholder over 10%, so maybe this 10% is not a magic number, but I believe there is a threshold in equities that says once you own more than 10% of a company, you now have to follow certain things within the SEC. So you can't, if you own less than that, you can just buy and sell it at a whim, right? But once you go over a certain amount, or once you're in a privileged position, you have to file documents to say, I intend to sell here, or give kind of some notice about, you're going to be offloading these things, because you can really tip the scales and wait. So I'm sure there's more lineage here on this 10% magic.
Yeah, absolutely. And the last bookmark for anybody watching this, go look up Elon Musk, Twitter, 10% stock. I'm pretty sure that's going to be a search that's going to hit because there was a whole big thing before he bought Twitter where he was holding 9.5%, I think. And he was kind of, his actions were influencing the price of Twitter. And there was a whole big investigation into, did he own more than 10% because he wasn't properly declaring, I'm going to sell, blah, blah, blah. So yeah, I think this plays directly into that. So as we move on, the next thing that I wanted to point out was the whole aspect of commingling, because obviously that's a big thing. That's a very real thing, a very real concern. And this was one thing that I think there's a little bit of very understandable concern with this bill as it relates to commingling. So first at the very top, we have commingling is bad. This bill allows it. And we had people saying, no, it doesn't. It clearly states it's not allowed. So when we look, sure enough, Commingling prohibited. Money, assets, and the property of all customer described in paragraph A shall be separately accounted for and shall not be commingled with the funds of the digital asset broker or digital asset dealer, or be used to margin, secure, or guarantee any trades of any person other than the customer of the digital asset broker or customer digital of the digital asset dealer with whom they are held. So right there, clear as day, it says no, you cannot commingle that. You can't take their money and go put it on margin, go leverage it, go do whatever you want with it, unless it is specifically the customer doing that. So right there was the whole, okay, well, one of you lied. But it does get a little gray, and I agree that this is a little gray. If we come down here in this section on participation in blockchain services, so this is where on previous episodes we talked about staking and how staking was a service, and that was part of what the SEC was cracking down on Coinbase and Kraken and Binance for, was offering these staking services in which you do have to commingle funds, because for the blockchain service you have to bring all these funds together into one pool and then stake them to earn a yield off of that for providing that service to the blockchain. So here it says, in general, a customer shall have the right to waive the restrictions in paragraph 3 for any unit of a digital asset by affirmatively electing in writing to the digital asset broker or digital asset dealer to waive the restrictions. So this was one bit that I do agree with the concern, which the concern as laid out was, hey, in this bill, the customer can waive the right to not have their, or to have their funds commingled. And a situation was presented which said, these are technology companies, this is software, they're going to have a terms of service that people have to agree or decline when they become a customer. And it doesn't seem like it's a stretch of the imagination to imagine the broker or the dealer or whoever the customer is signing up with to put in the terms of service, I waive my right to not have my funds commingled. And therefore, as soon as you click that button, I accept, all of a sudden you've waived away that right. And now all of a sudden your funds are commingled or done whatever with. And granted, it's laid out as if for participation in blockchain services, but it also clearly says in writing, okay, you read it, it's written right there. You can just waive it. And so I don't think it's a stretch of the imagination to imagine that scenario where, gasp, we agree to give up so many rights, as we do with any app you download, any, like there's so much. I think there's some documentaries on this.
Yeah, actually, the one thing when we were kind of going over this and pointing this out, and I was reading about it, the thing that came to mind is a lot of products that you buy. I bought a one of the cars recently, and part of the purchase agreement that you sign, it says, hey, by executing this purchase agreement, I am waiving all rights and entitlements to any sort of class action against the manufacturer for any wrongdoing, negligence, yada, 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 yada. Basically, it says, if you buy this car, you are not allowed to sue us or be a participant in any sort of class action lawsuit that might arise in the future. And then as part of that whole section, it says, unless you write a letter to us in writing and sign your name to it, stating that you would like to be exempt from this clause. And you have exactly 30 days to do that. Otherwise, this is in effect. And so I just think it's kind of, yes, we're in a very litigious society, but now we're just like, yeah, anyway, if you buy this, you can't sue, you can't be participant in a class action. And I actually sent my letter in and I said, please exempt me from this clause. I would like to maintain my right to participate in a class action. But here's the fun fact: you never get confirmation on if they actually receive that. So, it's just one of those things where, yes, I completely agree that is a very real thing, but I think this problem is a little bit deeper than just this singular occurrence.
Yeah, absolutely. I mean, there's so many rights, far more significant that we've waved away, to say the least. But that doesn't mean, it doesn't mean it's not worth noting for sure. So that pretty much covers, I think, everything I laid out as far as things that I specifically dug into the bill. I mean, I kind of breezed and read a little deeper on a lot of the other things, but those were some of the things that I specifically wanted to target in my reading to pull out of it to make sense of the back and forth. And like I said, I feel pretty satisfied with the language in the bill to reconciling those complaints and those differences that were narrated. So the last thing I wanted to touch on, though, because the bill pretty much is a slight extension of the status quo, and that is to say that it's the bill up until the end here is just basically saying, here's how this new realm fits into existing, yada yada yada, and to the point where some people were complaining, this overrules the SEC, and this tramples on all of our regulations we've had so far, which, as you saw, clearly not the case. We're amending onto the end of the literal Securities Act of 1933. So it's not trampling anything. It's amending and building on the bottom of it. Everything above it, 100% still applies and is still valid. So what I thought was interesting here at the end is the acknowledgement that the authors of this bill very much know this is not the end. This is not the end all be all legislation. This is a start, and there is a long way to go in this whole new world to better grasp the technology, the financial vehicles that we've never seen before, and the things that are still going to require regulation, but it's too big to all try to put into one bill. And so here at the end, Section 505, the study on decentralized finance. So in general, the Securities and Exchange Commission and the CFTC shall jointly carry out a study on decentralized finance that analyzes and then goes through and lists the things they want the SEC and the CFTC to analyze about decentralized finance. So we've talked about decentralized finance a little bit before on the show. We can certainly go into it more, but assuming you have a general understanding. So this is saying, like, go look at decentralized governance systems through which blockchain protocols may be developed, published, constituted, administered, maintained, or otherwise distributed, including whether the systems enhance or detract from the decentralization of the decentralized finance and the inherent risks of the decentralized governance system. So there's this very, I think, surprising awareness of these systems, because in a decentralized finance, you have to have some way to govern the protocol. And so those are these governance systems. And so it's specifically calling out some very on point pieces of that to say, hey, go look at this and don't just gloss over it. Like, really dig in and see, are these governance systems good? Are they, blah, 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 like you just heard there. And it even calls out potential benefits to decentralized finance, including operational resilience and interoperability of blockchain-based systems. We've very much talked on previous episodes about the resilience of decentralized finance, DEXs, decentralized exchanges, and the resilience they have through market turmoil when centralized exchanges like FTX or things like that are just running amok with customer funds. Decentralized exchanges are just humming along because they're just executing code. There is no emotional human bias put into their operation. So the fact that this bill is acknowledging the benefits of decentralized finance in operational resilience or transaction efficiency or transparency and traceability of transactions, everything's on a public ledger. And then also calling out to look into the risks of decentralized finance, which include pseudonymity of users and transactions. So obviously your name isn't on the transaction per se. Your hexadecimal 256-bit address is on there. But also looking into cybersecurity vulnerabilities, because while you don't have the human factor of centralized exchanges, you do have the fact that this is code, and code is vulnerable to cybersecurity attacks. And so, looking into the risks of decentralized finance in that way, as well as some other guidance here. Then there's also the same, it was called upon that they have exactly 1 year. Yeah, right here. Report not later than 1 year after the date of enactment of this act, the SEC and CFTC shall jointly submit to the relevant congressional committees a report that includes the results of this study, and then tells them to also go do the same thing on NFTs. And then also just at large, a study on financial market infrastructure improvements. So how can this new technology improve on financial market infrastructure? So to me, these last three bits at the very end were almost the most interesting, because like I said, it exhibited a surprising amount of awareness on the behalf of the authors in Congress that I completely agree with the points as far as these are the things you need to look into. Go study it, come back to us in a year, and let us know what you found. So I thought that was pretty interesting. Little one more thing at the end of the at the end of the little report there.
Yeah, no, I think it's good to look into some of that stuff, but I think it's also this covered a lot of the crux of what's needed right now and has been needed for a while, and that's that regulatory clarity. So yeah, I agree with you. Where hey, look, yeah, it seems like they're just rehashing what's already there, and they are because everything the way it is today is a little discombobulated and a little unclear to people. It seems. So maybe this, will clarify some of that aspect of it, and then yeah, 100%. Let's what's the further implications of the other edge of this technology when it comes to decentralization, and where does that fit in, if at all, as part of something that Congress might regulate? Because there's other decentralized functions and features of things in the world that don't necessarily have different laws and rules of Congress out there. They might be governed by a state law or local ordinance or things like that to account for some of those other hey, I go to this place and I buy this thing, just ad hoc markets of buying and selling used stuff. Anyway, 100%. Yeah, it's a good thing to look into, and I guess take it with a grain of salt. You'll get something back, which will be some information in the future.
Yeah, and in the lifespan of the bill, like we said, it's very possible that this thing ends up looking nothing like this once the House of Representatives get through with it and various deals are cut and all that kind of stuff that happens to these bills. But I think it's interesting. And the other thing that I meant to mention, because there is a very real question a lot of people less familiar with the space are asking, and it's a very good question, which is, why do we need new rules? Why can't we govern this the way we govern stocks as securities and all this kind of stuff? And this was raised in the debate. And again, it was one of those moments of awareness that I was glad to see, because somebody defending the bill said, well, a stock is always and forever understood that when you buy a share of Apple, you are investing in the efforts of the company Apple. For the life of that stock, that is the understood agreement. When you buy a share of that you are investing in the underlying company. And so that's pretty clear. And where things get a little less clear is in this world of assets, digital assets and tokens. There is the very clear beginning of, hey, we're going to offer this pre-sale of this token. And that's a pretty clear investment in the company that's about to launch that token or blockchain, because you're hoping and you're investing that they're going to use the funds raised to deliver that service. But there is a transitional point where that asset now, we talk about AVAX all the time. When we go buy one AVAX off the market, there is very little of that understanding that like I'm buying this like I would buy a stock. That's not really the case. I'm not buying it so that Avalabs gets my money. I'm buying it because, like we've said before, we have goals of being that staking service for the blockchain, for the functionality of the blockchain. And now all of a sudden it's a little more gray because stocks don't have that kind of utility behind them. And it's that transition period that where I think the clarity is much needed. And there, I didn't get into any of it, but there are bits in this bill that talk about that decentralization, where that switch happens and how it happens. But I wanted to call out why these tokens, even though they look like stocks, should be perceived, slightly differently and need this clarity.
Yeah, I would also caution that, call out that the majority of the content in this bill that I read wasn't really introducing new rules around things, but rather more explaining the definitions and how they fit into the existing rules and standards and regulations that are out there. So yes, there were pockets of new ones. You're absolutely correct. However, the bulk of this was just adding clarity to say, no, this definition of this thing is X, and this is governed by the SEC. This is this definition of Y, and this is governed by the CFTC. And so I think it was the bulk of this was a lot more of, okay, here's how we take these new rocks and put them in existing buckets.
Yeah. Yeah, that makes sense. And there are it's 5 or 6 pages at the beginning. That's literally just laying out new terms and new definitions of this is what a blockchain is. This is what staking is. And so, yeah, exactly like you said, they lay out, here's the terms that are brand new. And then now here's how we're going to classify them in the structures we've already established well and through.
So that brings us to the end of this week's episode. Look into crypto regulation and the very first signs of life out of Congress when it comes to this regulation. It is definitely something that we will keep an eye on. It is definitely something that we encourage you to try to dive into and learn for yourself, just to see how all these bits and pieces fit together. Something we always encourage all the times we're encountering something new is lift up the hood, try to understand what makes the engine tick, and try to connect these dots for yourself so you can not just take some random soundbite on the internet as fact, but actually then have confidence in the facts that you are deciding to formulate your own opinions and decisions around. So we always advocate that whenever possible. And this is certainly an area that I myself am growing my knowledge in when it comes to kind of analyzing how does this bill actually interact with things that are already existing? What is the language that is in there? What is the reasoning behind it? So I personally have found this rather enlightening, and you might as well too. So encourage you to take a look more at that. Meanwhile, the stock markets are always up and moving around, and some recent action with the downgrade of the federal credit rating, the Treasury credit rating of the United States government down to a AA plus from AAA credit rating. Kind of sent a few little cracks in the market. We'll see if this is the end to the up and to the right chart that we've been experiencing for a long time. Or maybe it's just a blip and everything goes back to things as normal in the coming days. So we'll keep an eye on that as well as earnings season rolls on. So hopefully you are finding interesting investment opportunities, trading opportunities out there. So good luck, have fun, and remember, think outside the block.